Isn't that fascinating? In theory, Donald Trump should be good for crypto. He made a lot of changes. He replaced the SEC chair. He also started the Strategic Bitcoin Reserve. Yet, since Donald Trump is president, all of crypto prices are going down. Altcoins are going down even more than Bitcoin. What is going on? Since the 20th of January, where Bitcoin hit $109,000, to today, where we're now at $83,000, Bitcoin went down by more than 23%. The momentum around crypto also changed. We are now below the 120-day simple moving average. Now, I've backtested all moving averages from the 2-day all the way to the 200-day, and the 120-day simple moving average historically is the best. We should be buying whenever we are above. We should be selling whenever we are below. Currently, we are below. We should be betting on falling prices, but just have a look at prior bear markets. In 2021, 2022, we went down by 76%, so we're just starting a potential next bear market. In 2018, we went down by even more, 83%. So that's how that looks like when we overlay the current price action. It appears as if volatility of Bitcoin is going down. So the upside is going down, but also the bear markets tend to get more and more muted over time. So I think it would not be surprising to actually see Bitcoin bouncing a bit earlier this time. Maybe in case we've just started a bear market, we might be bottoming out somewhere around 40K. That's also in line with the average cost basis of the market, or the realized price. At the end of a bear market, we tended to go below that realized price, and that's currently at 43,700. So 40K should be a pretty good bear market bottom. Now, it could be even more bearish by not just looking at the overall average cost basis, but by just focusing on the long-term holders. Because in the past, at the end of a bear market, we also tended to hit that price level. Currently, the long-term holders have an average cost basis of 26K. Now, I'm not waiting until we hit 26K in order to buy cheap Bitcoin, but when we are at 50 or 40K, I'm definitely starting to get in again. Now, this is the very long-term assessment. On a shorter time frame, so over the next few weeks, not over the next months, we could already be quite depressed. The market is already risk off. A lot of money is currently on the sidelines. Check this out. This is the stablecoin dominance. So how much of all of crypto is currently in stablecoins? And when this is very high, the market is risk off, right? A lot of capital is in stablecoins. It's peaked at 19%. So that was in November of 2022, and it bottomed in March of 2024 and in December of 2024 at roughly 5%. In the last 1.5 years, we moved in a trading range between 5% and 8.5%. And if we stay in that trading range and the stablecoins get deployed, and the stablecoin dominance is going down, then the crypto prices should go up. Just have a look at how well this works. So this was the 9th of November 2022. The stablecoin dominance was very high. And at the same time, the Bitcoin price was at historical lows. It was at 16K. When we then look at the 7th of December 2024, we are very close to 100K in the price. And that is when we bottomed with the stablecoin dominance. So there's really a connection between those two numbers. And if we just look at the last 1.5 years, we are now rather risk off. We really have to see some kind of news event, maybe a central crypto institution that's blowing up, similar to what we saw in 2022, 2023, right? We had Terra Luna, and we had Celsius, and we had FTX, and we had 3 Arrows Capital. We have to see some kind of collapse for the market to get more risk off again. Now, there's an interesting connection between the Ethereum price development and the price development of altcoins. Some altcoins are directly connected to the Ethereum price via liquidity pools. So when the Ethereum price is going down by 10% in US dollars, then those altcoins go down per default by 10% as well. However, even without that connection, we tend to see more price correlation between Ethereum and the altcoins than between Bitcoin and the altcoins. So it's really Ethereum that's marking where the altcoins are going. It's not necessarily Bitcoin. And so that connection implies that the altcoins might have a hard time going forward, and that this long-term trend might break, that we actually could fall below this support. So this is the dominance of the altcoins that are not in the top 10. What are the smaller altcoins doing relative to the rest of all of crypto? This is Ethereum relative to Bitcoin, and there's likely going to be more pain ahead. Ethereum likely underperforms Bitcoin by another 23-24%. In the worst case, we could underperform by another 64%. That's of course bad for the alts. Why is there even that much volatility in crypto? Why do we see these massive rallies and then these massive crashes? What's causing the crashes? Fundamentally, I believe what's going on is that once we are at the bottom of a bear market, once Bitcoin went down by a lot, 70-80%, then the long-term holders, the dollar cost averagers, create a new floor, right? They continue buying into Bitcoin because they believe in Bitcoin long-term. Then the Bitcoin price appreciates over time, and then the market gets more and more risk on and is looking for the next Bitcoin, right? When Bitcoin has already made a 2, 3, 4x from the bottom of the bear market, people are wondering what still has upside potential. What's then happening is that there's more and more speculation with very risky altcoins and also very small altcoins, right? That's then when meme coin trading is picking up. That's then when people trade with AI altcoins. That's when all of the money is going into very short-term speculation. The issue with that short-term speculation is that it's 100% player versus player, right? There is no value creation in meme coin trading. And crypto trading is a game of luck, but also of skill. And the people that have more skill, the people that are insiders that might have launched the token, they get most of the capital. And the tourists that just started trading crypto, they lose their funds. And so because of that capital concentration and because all of those new joiners lose their money, all of the liquidity dries up. And that's why in the end those bear markets start again. This whole cycle reminds me of online poker. I used to be a professional online poker player, so I did this for a living. I paid my study fees with it. I paid my bachelor's and my master's with online poker. I played hours and hours. I played millions of hands. And the way online poker died, the reason why the interest in poker went down over time is because the games got harder and harder. So new people that didn't know the game, they lost their money, and the professional people, they got all the money. But after a while, the pool of professional people grew and the pool of new beginners didn't grow as quickly. And so the professionals, they had to fight for the money from just a few people. You ended up sitting at a table with in total 10 people, 8 people were professional players and only one person was the newbie, was the fish. And so all of those professionals had to basically share the money of the one fish. And so the winnings of those professionals went down over time. And that's then also how the hype stopped. Because the reason why people enter online poker or the reason why people start with meme coin trading is always because of those great success stories, right? When there are a few people that make hundreds of thousands, even millions of dollars, that's what's attracting the new capital. But if we don't find any new stories like this, if those stories die down because all of the fresh capital stops moving in, that's then also when the excitement stops happening. So that's why online poker is now only roughly 1/7 of the size of what it used to be in the hype of 27-26. And so we see the exact same thing now happening for pump.fun, right? The meme coin trading on Solana. The number of deployed transactions is going down, and I think that the market itself has not yet adjusted to that. This is the Solana dominance, and the potential downside is still another 70%. Solana might underperform the rest of crypto by another 70% from here. We've just started the down move. Now those are all idiosyncratic problems, right? They're all within the crypto world, but besides that, crypto is not just working in isolation. There are also external factors, and the traditional market is a potential risk factor as well. If you've been in crypto for long enough, you might remember the COVID crash, right? Stocks went down by 30, maybe some even by 40%, and Bitcoin went down by 50 and 60%. What we see over here is the Nasdaq 100, so technology stocks at the top, and we see the Bitcoin price at the bottom. The charts start with the COVID crash. So first the stocks crashed and then Bitcoin followed. And we can see how technology stocks and Bitcoin tend to now move in sync, right? When technology stocks go up, Bitcoin tends to go up as well. When technology stocks contract, then Bitcoin tends to go down. And then when the recovery comes, Bitcoin recovers as well. Bitcoin is simply a levered bet on technology. Technology only went down by 35%, while Bitcoin went down by by 77%. What we're seeing now here at the bottom, that's the correlation coefficient. So how much do technology stocks and Bitcoin move in tandem? Are they going up and down at the same time? If the answer is yes, the correlation coefficient is at 1. If the answer is no, it's at 0 or -1. So 0 means the two assets are not connected to one another. -1 means that they move in opposite directions at the same time. But this correlation really started with the COVID crash. Before that, we didn't really have that much correlation. So Bitcoin and technology stocks were somewhat independent from one another. This tended to move around the 0 line. Since COVID, that has changed. So now when technology stocks crash, Bitcoin is very likely going to crash as well. And then the big question is there that much more upside potential for technology stocks? Or is the risk potential now higher than the reward? It seems like more and more people do get spooked. It seems like more and more people get risk off now. Otherwise, how do we explain charts like this, right? Gold is at new all-time highs. Gold is the classical risk-off investment, and people now want to be somewhat risk-off. Things don't really look that healthy anymore. There's the tariffs, there's the high valuations. And here's what I mean with high valuations. This is the Shiller PE ratio. This is a very long-term chart starting in 1871. This shows how expensive stocks are relative to their future earnings. The historical price to earnings ratio for stocks is now at 35. It could easily go down by 50%. Now have a look at the valuation of stocks relative to the US GDP. Again, very, very high. This is the dot-com crash. This is the global financial crisis. Or have a look at this. This is the S&P 500 relative to the money supply in the US. So we are now ignoring that the US dollar is devaluing over time. We're dividing US stock prices by how many dollars are floating around. This was .com. This was the global financial crisis. So a 50% drop here, a 60% drop here. And this vertical line here, this is when Bitcoin started trading. So Bitcoin never really saw a real crisis. If stocks were to drop again by another 50% from here, then would it be that surprising to see Bitcoin at 40K, 30K, maybe even 25K, which is the long-term holder average cost base? It's definitely possible, right? Now don't understand me wrong. I'm not saying that this will happen. I'm just connecting the dots, right? We simply see more correlation between stocks and Bitcoin now, and stocks are historically high and they could correct quite a lot. And then Bitcoin will go down as well. If you've been following this channel for a while, then you know that I'm shorting the altcoins, that I'm betting on falling altcoins since we hit the 100K in Bitcoin. You might also know that I own more gold than I own equity right now. I am rather risk off. I go so far to say that I believe that most other investment communities, be it crypto or not, lost money in the last few months. I don't believe that our community lost money. Most people made money, again, because we saw this coming by using analytics, by using all the data that I shared in this video. Now, if you want to know more details, as in what kind of positions do I open to make money, how do I currently balance my risk, etc., then feel free to check out the premium membership down below. It's thebitcoinstrader.com. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel. Feel free to join premium or see you again here on YouTube. Cheers!